I've been in the mortgage business now for close to 20 years. I've never been a real estate professional, right? I've never done your job. I've been fortunate to work with a lot of the best real estate agents in the country, right? So I've had that perspective. But what I talk about in this presentation, kind of the way Jerry teed it up, is sometimes can be not so easy to hear, right? Especially if you've been doing your business a certain way for a long time. Sometimes people will shut down. Sometimes people will just kind of dismiss, be like, he doesn't know what he's talking about. I'm just going to keep doing what I've been doing and we'll be fine. I would just ask, just keep an open mind over the next 45 minutes. Ask yourself, what if? What if he's right? Right? Have a perspective change, because to Mark's point, I think this needs to happen. Right? I think the direction we're going and the direction we're taking this industry is going to be really important. So, show of hands, who's a real estate agent in here? Okay, almost everybody.
I got to work on your slide. I'll be right back.
Cool. So, I'll start with what I believe. The changes that are happening in this industry, I believe, are the most opportunistic changes that we'll have seen in decades. Right? We didn't have an opportunity to really separate ourselves, but we will now. I also believe that the real estate professional of 2023 and prior is gone. I don't think that there's a need for that individual anymore. And I'll explain why as we go through here. I'll unpack that. My goal with our time here today is that the next time somebody asks what you do for a living, right? I ask who's a real estate agent, everybody raise their hand. If someone says, hey, Jessica, what do you do? I want you to smile at them and say, I'm changing the real estate industry. Not only is it a much better after conversation than just telling someone you're a real estate agent, but there's a lot of material that comes with that, right? And I want you guys to have that confidence. So I'll share that as we go through here. As I work towards that, just understanding kind of why I feel uniquely qualified to talk about this is probably going to be important. So I've been in the business since 2005, right out of college. And I really started my career in 2011, and I'd never met a realtor. I'd never done a purchase loan. I didn't have a database. I was brand new. So I just did what everybody else did. I showed up to open houses, shook a lot of hands, kissed a lot of babies, networked well, got enough people to like me, right? Built relationships. And in that, I was able to grow our business to become one of the top 25 lenders in the country, #1 in Orange County for many years. And if you would have met me in 2018 and you would have said, what do you do for work? I would have said, I'm in the real estate business. I'm in the mortgage industry. Just with that level of pride and passion. And people were like, well, you're kind of good at it. Why aren't you more excited? And I just wasn't proud of the fact that I was being praised for selling more debt to people than others. I didn't want to be known for that. Right? I wanted to be known for something more. I also looked back at the trajectory of my clients' financial and real estate livelihood. And I had clients who we helped buy a home in 2011 that didn't really do much in 7 years later, right? They just bought a home, lived in it, and paid for it. I had clients that were mismanaging equity. I had clients that were not taking advantage of opportunities. They weren't buying other investment properties. They were going into debt after we got them out of it. And I said, we're not really doing anything to help people other than putting them in a home, right? And when we do that, they own a home, but very few, if any, became really successful, well-rounded homeowners. And that's a really important term to understand. And most people don't really understand how to quantify that. It just so happened also that in 2018, you guys remember when rates spiked at the end of 2018? That was the first time in my career where I'd ever seen rates go up. And I remember we just started losing clients left and right. We got oh, Ryan, you guys are great, but, we've loved you all, but so-and-so is cheaper. I remember we had one client, I'll never forget this client. We helped him for 6 months. Multiple offers, met with him 3 times in our office, more of a therapist, I'm sure you guys can relate, right? He finally gets his offer accepted. And he says, Ryan, I really appreciate all you guys have done, but Loan Monkey is a 1/4 point cheaper than you, and we feel like we need to save that money. I lost to a company called Loan Monkey. That was a real name of a mortgage company. I don't know why, but it was. And I'm like, what is going on here? I'm the #1 lender in Orange County and I can't beat Loan Monkey? So I do what every good husband would do, and I go home and I start complaining to my wife. I said, Brian, can you believe this? Like, they left me for Loan Monkey. She goes, well, how much is the payment difference? Like, how much is it? I go, it's like $100. It's not even that big of a deal. And she says, well, I don't know your business. Like, how much over the whole life of the loan? I said, babe, it's like $40,000, but I don't think you get it. The look on her face made me realize I didn't get it. My own wife would have chose Loan Monkey. And I'm like, well, what am I doing here? Like, how am I different? Right? If somebody just thinks that my product is exactly the same as the next person's product, of course they're going to choose the cheapest. So I started to get really curious. And then, some of you may have heard this before. I apologize if it's redundant, but this was the driving factor behind why we made the decision to change our business practice. I got a call in 2018 from a family we helped in 2017. The wife calls me and says, Ryan, we have to sell our house. I said, why? We just helped you buy it last year. The market's going straight up. What's going on? She says, my husband got in a car accident and he passed away and we can't afford the house anymore. I was like, oh my God, I'm so sorry. Like, I just want you to know, life insurance is going to step in. It'll likely pay off the mortgage, help with the kids. I think you'll be fine. What do you think she said? No life insurance. And at my core, I knew that was my fault. And everyone tried to convince me it wasn't. Ryan, you're a loan officer. You don't sell life insurance. It's not your responsibility. And even the real estate agent was like, well, not much we could have done there. Really? I'm a father, I'm a husband, I own a home, I have a mortgage, and guess what? I have life insurance. Why? Because someone cared enough about me to tell me that I can't really call myself a successful homeowner unless I have that box checked, amongst many others. And that's when all of us realized wealthy people aren't wealthy because they have money. They're wealthy because they have information. And they have people in their lives that are willing and committed to giving them that information and those opportunities on a really proactive basis. Right? But 92% of America doesn't have that. Right? They don't have financial planners. They don't have estate planning attorneys. They don't connect with CPAs. They're just kind of on their own. And guess what? Even the ones that have them, how many of your financial planners, if you have one, talk to you about acquiring real estate? They're not taught that. It's not what they do. How many of them talk to you about liability management? It's not what they do. All right, so we realized there's a real opportunity here for us to step into a space that is needed. Right? We can be known as an organization and as a group that can help the average person in ways that no one else is. All right? We can sell a different product. We can offer something more valuable. And that's when, if you can change the slide, that's when we realized, and if you guys can see these slides on the side, some of them will be important, this one not so much. But that's when we realized we can actually redefine this industry. Right? And I'm going to use real estate professional kind of synonymously with mortgage professional. I'm going to kind of bunch us all together here. We can redefine what it means to be a real estate professional. Right? The consumer will come to expect more from us than they have in the past. They'll no longer allow for someone to just sell them a home or give them a mortgage and then send them an email every now and then or a pie on Thanksgiving. They're going to require that individual to lean in and be more committed to their financial outcome. Go to the next slide real quick if you don't mind. So I'm going to show you this. This is a slide of 5 different shoes. They're actually all the same shoe. They just have 5 different prices. Which shoe would you buy? The cheapest. Well, what if the $90 shoe had a better relationship? What if the $77 shoe had better marketing? See what I'm getting at? You could literally take those shoes and put all of our faces in there. Because the consumer sees our product as the same. We buy, sell, and finance homes at the end of the day. All right, we have to be able to say not only how we are different and unique, but we need to be able to show it and commit to it. And this is the problem that I'm finding in our industry. We've been dealing with this since 2009, right? We've been racing to the bottom at a rapid pace. The real estate industry is experiencing that now, very small in the beginning, but as consumer awareness grows, that will continue. So what are we doing about it? You can go online and try and find out what realtors do. 179 things agents do to earn their commission. Well, the link above it is 184 things people do. I mean, that person's got 5 more things. So work with them, right? The one in the middle, even though they misspelled the first sentence, tries to explain what they do. What's the problem with this? Those lists are all going to be the same. Because I'm going to see your list and I'm going to go, oh, there's 3 things I'm going to add to mine. I'm going to see your list and I'm going to do the same thing. Pretty soon we're going to have 700 things that a realtor does. The problem is, we're all going to have the same list, but you might be willing to do it less than I am. You might be willing to go less than she is. And that trend will continue. So what do? We need to put things on our list that other people can't put on theirs. Let me show you something else. This is you guys know the Sitzer, the guy who did the whole NAR lawsuit? You know he started his own real estate company, I'm assuming. Everybody knows that? If you didn't, he started his own real estate company where you can show a home for $40. He'll write an offer for $150. If you use AI, it's $99. Right? And they claim to save $15,000 per transaction. The guy who started the lawsuit. Now you may be saying, look, this isn't new. There's always been real estate companies that have been kind of a pay for service type thing, right? This is the help you sell. Those have been around for a long time. But the awareness has not been around, right? The headlines have not been around. Let me show you this. Next slide, if you don't mind, Mark. Yep. Oh, this is just another slide that shows, so if you actually go to the website, it's Landian. It breaks down 3% standard versus the few things you'd pay for and shows you save $14,000 some odd dollars, right? Like this is getting awareness, it's getting national attention, whereas before it wasn't so much. Here's the number. You guys know Ken DeLeon? Raise your hand if you've heard the name Ken DeLeon. He's been the #1 agent in America for many years. I don't know if he still holds that title. He's up in Silicon Valley, and he is going on every network and podcast that you can think of, basically stating, look, we're just 3%. When we sell a home, it's 3%, no more. We're not paying buyer's agents. And he says on his website why you shouldn't pay buyer's agents. Right, he makes a very clear case. But what he does is he adds an incredible level of value. He has people that on his payroll that are W-2 staff members that do things for his clients that the average realtor just can't compete with. Why? Because he sells $10 million average homes. The #1 agent in the country is starting to say, yeah, we're not going to do that. We all have to start to say, well, if we are, why? Right? What can we offer that others aren't? Next slide, please. So this is where I'm going to ask you all to start changing the conversation. You can just roll through the next one. There is a script that we have been teaching our agents across the country that they have been having a ton of success with. And you don't need, this is being recorded, so if you guys want this script, just email Mark or the team and we'll send it out. But the script that we should be using is, Lauren? All right, so Lauren's going to be the buyer, right? We're having a conversation. We're talking about going to see a home, and I say, Lauren, we have to have you sign a commission agreement. And you say, well, I know someone else who's probably willing to do it for less, or you just get into a commission conversation in some way, right? What I would love for you to start saying, just go back one, sorry, is, hey, Lauren, look, and this is where people get triggered, so hang in with me here. Lauren, as a real estate agent, interestingly enough, I think that you paying 3% commission to a real estate agent to help you with a transaction for 30 days is likely too much. Now, we've been getting away with that. We've been doing it because it's been common practice for many, many years, right? Now, there's more consumer awareness, there's more optionality, but I want you to know that the 3% that you're going to pay our team is not for 30 days of work. The 3% you're going to pay our team is because we're going to be the most valuable team of people in your life, along with our financing team, not for 30 days, but for the next 30 years. We're going to help you and your family grow generational wealth because we're going to be hyper proactive with helping you acquire more real estate, helping you set goals, helping you become a really successful homeowner. And I want to show you all the ways in which we're going to do that. Does that make sense? That commission script has been helping our agents commit to something that can't be on that 185 point list. Why? Because it's really hard to do. It's hard to make that type of commitment at scale. Think about it, right? Let's say you help 5 families a month, 60 a year, and you do it for 10 years. How can I help 600 Laurens with that level of commitment if I have a small team? Or worse off, if I'm on my own? And the answer is you can't. The same reason I couldn't. My team couldn't do it ourselves. That's why we had to build an enterprise around it. Right? Together, collectively, we can. Right? We can change people's lives in ways that they're not expecting, but when we show them, they realize, oh wow, like I can zoom out here, right? People need to zoom out from 30 days to 30 years. No one's ever become wealthy saving a quarter point in their mortgage. No one's ever created sustainable wealth for their children by saving 1% in their commission. It's the information, right? It's the proactive data. It's the goal setting planning. So, next slide, please. When you start to break down your value proposition to people, I would encourage you to do it in 3 parts, right? This is what we do. So, if somebody says, hey, why you? There are thousands of cheaper versions of you. Why you? The brain remembers things in 3s, right? So we break down our value proposition to a client before, during, and after a transaction. If you look at this slide, you'll see that 30% of our value that we are, and when I say we, I mean this room. Like if me and, what is it, Catherine? No.
Oh, Courtney.
Courtney. If me and Courtney are partners, right? 30% of the value we're going to provide to Mark as a buyer or seller is going to be before the transaction ever starts. Only 10% of our value is during. But if you look at that list of 185 things, it's almost all during. Right? Which just isn't that valuable, to be quite honest. And the most important part of what we do, 60% of the value that Courtney and I are going to give to Mark is going to be after closing. Why? Because that's when people make or break wealth. That's when they make good decisions. That's when they capitalize on opportunities. That's when they lean into the market. But they won't do it on their own. Right? They need someone proactively holding their hand and pulling them where they can go, not just hoping they show up there. Next slide, please. Sorry, this works better if I have a clicker.
Sorry, buddy.
All right, so let's start with the before. The problem in the before is that we're selling a product that people don't want. 82% of consumers say it's a bad time to buy a house. Right? We also have mortgage demand that's dropping. Right? People are still waiting for rates to drop. Why? Because they're not in the 5s. And 5 seems to be kind of that magic number. 4's better, 3's good, 2's great. Right? I don't know if we'll see that again. But the common conversations we're going to have in the before are these 3. 1, kinda, not sure, not ready. Raise your hand if you've had a conversation with someone in the last 30 days about real estate where they said, kind of want to sell, I'm not sure, I might want to buy, I don't know if it's a good time. Probably all of us, right? If you guys need to stretch, go ahead. I'm going to ask you to raise your hand a few more times. I see alligator arms in the place here. Okay, so that conversation we're going to teach you how to solve. Second one, people who are trapped in their home, right? I would love to move, but I have a shiny 2.75% interest rate, and I can't imagine giving that up for something else, right? So I don't really think it's a good time to sell. That's a really common conversation, and how we help people before. We'll go through that. Next one is I'm ready and pre-approved. This is the most mismanaged client that we see in the marketplace today. It also happens to be everybody's favorite client, right, as opposed to the other 2. But I'm going to show you what is wrong with that client and where we as a community, as a real estate and mortgage community, are missing. So let's start with the first one. Let's see, what was your name, sir? Adam. So if I'm a client and I say, hey Adam, I just don't know if I should buy a house. I don't know if it's the right time. I'm seeing all the headlines that you're seeing, and some of them are pretty scary. How do you engage with that client? What would be your strategy?
Well, we got to discuss their needs and wants and why we're having the conversation. So assess, behind the scenes what is really going on, and try to focus on that.
Yeah.
And how we're going to help them get there.
Love that. If you guys didn't hear him, he said, ask questions, assess the needs, really understand kind of what's happening in that client's life, and help them get there. That's a better answer than I normally get. The answer I typically get from real estate audiences is, well, we just keep following up with them. We give them a card, and we just say, yeah, don't worry. Whenever you're ready, call me. That's a problem, right? Because we're putting in the onus on them. So the first thing is the script. So if the roles are reversed and Adam is my client, I would approach it as I would say, Adam, first of all, I really understand, right? The headlines are confusing. There's a lot of uncertainty. I understand why you feel that way. I want you to know, as a real estate professional, my primary objective is to not convince you to buy a home, right? It's just to give you all the information, advice, and education that you need to make a really educated, confident decision. And it sounds like you haven't gone through a process to do that yet. That's why you're in that uncertain stage. And I believe you owe it to yourself to either know one way or another. Would you agree?
Yes.
So what I really encourage you to do is meet with Mark and I. I'll be the realtor, Mark will be the lender. And I promise you, neither one of us are going to sell you a home or a mortgage, right? We're going to ask you really important questions. We're going to show you some data that you might not be aware of, and we'll help you figure out if it actually makes sense or if it doesn't. And one of two things is going to happen. You're either going to confidently decide now's a good time and we'll help you execute, or you'll confidently realize now is not the right time, but you'll have a plan and a strategy and a timeline. Either way, you deserve one of those two outcomes. Would you be okay just setting up that meeting?
Sounds great.
So every time somebody says, I'm not sure, I'm not ready, trigger that. I don't care is strong. Like, that's not my objective, is to convince you to buy a home. My objective is to give you what you don't have today. Now, scripting is one, belief is another, right? Remembering what to say is an important part, but you only really believe it when you experience it. Right, if you can sit through a consultation with a client and watch someone go from I'm not sure to I can't wait in an hour, which is what he has the ability to do. Because again, if money weren't a problem, we'd have 100% homeownership. Money is what gets in the way. Right? So when you go through that, when you can experience it, then you believe that process, and you should never let a client ever again tell you, I'm not sure, I'm not ready, and have it be an acceptable outcome. Does that make sense? Cool. All right. The second conversation is when people feel trapped in their home. You probably won't be able to see this slide very well. When someone says, oh, I have a good rate, it's not a good time, I'm not sure, please know that there's a lot going on in most clients' lives other than that nice shiny interest rate. A good example of this, raise your hand if you're about to go talk to a homeowner about potentially selling their home. How many of you engage your financing partner in that? Okay, 1.5. Awesome. I would encourage you, every single one of you, start doing that. And I know it's not normal, but here's why. Right? This is a real example. So one of my real estate agents who I work with, I taught them how the importance of this. So when someone said, oh no, I have a really good interest rate, I want to sell, I really do, I want to move up because there's this neighborhood I want to be in, but I really can't. That changed him to say, okay, I'm going to see if this works, right? Got him in front of our team. This was the scenario. He owned an $800,000 home. He had a 2.75% mortgage, which is awesome. He had a HELOC, a car loan, $55,000 in credit card debt, $5,000 in liquid savings, earning very little money, very little disposable income, under life insured, no estate plan, on and on and on, right? The only great thing on that list is the 2.75. And the equity position. Everything else is scary, but that's not what the average homeowner is focusing on. So we did what we call a financial transition plan, right? And that's when someone is even remotely interested in selling a home, you have a financial transition plan with your financing partner to figure out if they were to relocate, What does that financial transition plan look like? This is the outcome. So they ended up buying the $1.1 million home. They were in the neighborhood they wanted to be in. Same interest rate, we just changed the numbers around. Now it's a 7.25. Paid off the HELOC, paid off the car, paid off the debt, $45,000 in savings now, $2 million in term life insurance, have an estate plan, on pace to retire, and saving $450 a month. Who is going to do the math to go from where they are to be able to get there? Like, we don't teach that. Right? So we have to engage all of our resources and say, look, this is a before conversation. We're not even talking about the transaction yet. We need to get the financing team involved so we can help you make a good decision. Now look, not all outcomes are like this. Sometimes we meet with people and we say, you're right. Don't give up your interest rate. Stay where you are. Right? Because they don't have all the other variables. But this is why I would really encourage you, engage your financing partner whenever you're talking to a homeowner, because the outcome will be far greater. Doesn't always mean you'll sell the house, but it'll be a great outcome. Next is the pre-approved client. Anybody want to tell me what's wrong with the pre-approved client?
Nothing.
Nothing. It's everyone's favorite client. Who here has pre-approved clients they're working with right now? Show of hands. Okay, a lot of people. Are they all under contract?
Which one?
Yeah, all of them.
BRBC or a house contract?
Oh, a house contract, yeah. Why are they not? If they have a pre-approval letter, why aren't they all under contract? Haven't found what they want? Why else? Picky? Uncertainty? Price range? Waiting for rates to drop? There's a million reasons, right? The main reason is because that piece of paper that says they're pre-approved means they can buy a home, but they don't actually know if they should. And the kicker is no one's actually taught them if they must. I'll tell you a story about this. So a client called me in 2022 who we pre-approved to buy a home in 2015 in Orange County. 2015, pretty good time to buy a house. They saw all the headlines that said the world's going to end, right? Housing prices are going to drop, all these things. They never ended up buying a home. And when they said, you know what, we're just going to hold on for now, what did me and the realtor do at that time? Oh, well, okay, on to the next. They really should have bought, but I don't know. Anyways, keep going. They called me in 2022. They now live in Arizona, and they're still renting. That family had to relocate from their family. They now have small children who they had to move away from their school. They had to completely uplift their life. Why? Because I didn't do my job. I thought my job was just to pre-approve people and close their loan when they were ready to do it. The realtor thought their job was just to show people homes until they found the right one and then get the deal closed. That's not our job anymore. Our job is to remove fear and anxiety and uncertainty and replace it with excitement, confidence, and motivation. And if I would have known that was my job back then, that family would still be here in Orange County around their parents, and they would have hundreds and hundreds of thousands of dollars in equity as opposed to renting with zero equity. So, next slide, please. When you have a pre-approved client, there's steps to go from I can to I must, and I would encourage you, do this exercise. Go talk to all your pre-approved clients right now and ask them this. It's Tom, so if you have a pre-approved client, say Mark's that guy, right? Say, Mark, I know you're pre-approved and we've been talking about buying homes and looking at properties. I haven't actually yet, but do you actually know if you should buy a home? Ask that question to your pre-approved buyers and see what they say. Almost every single time they're going to say, yeah, I think so. Right? And then go one step farther and say, do you actually know if you must buy a home? And 100% of them are going to say no. So there's a process to get someone from that, right? Because the client that lives in Arizona now, they needed to buy a house in 2015. I just didn't know how to show them that back then. I didn't know how to show a cost of waiting analysis, and I didn't know how to show, increase in home prices. I didn't have the tools back then. And most real estate professionals don't have those tools still today. Most mortgage professionals don't have those tools still today. Right? So the first step is they need to understand data and facts. Right, so we have an entire process we take people through called Bulletproof Buyer Process. I'm sure if you know Mark, you've probably heard of it before. Right, but this helps people realize that the real estate market is not going to hurt them. I think we are all pretty clear after hearing Jerry today, we're in a safe spot when it comes to real estate here, right? People still don't know that, right? They still feel scared of it. Next is having a clear understanding of your personal economy versus the national economy. Because people read the headlines and they internalize that. I can't tell you how many times I heard, well, I read this article that housing is going to crash. First of all, you just read the headline, because if you read the article, it didn't actually say that. Right? And secondly, you don't have data to support that, and it doesn't actually matter what's happening nationally. The only thing that matters is, can your personal finances allow you to buy a piece of real estate that in this area is almost 100% sure bet? Once we get people to that place, right, the should and the must start showing up. Next is competitive advantage. How many people love when their clients go up against 20 offers? How does the client feel? Right? They feel like they're just getting ran over. I remember my sister calling me, it was 2018 or something. She goes, I can't believe this. A home came on the market and it was sold in a day. How do people do that? That's just the world we're in. Right? But she felt afraid to enter that market because she didn't want to overbid on a home. She didn't want to feel like she was paying too much for something. So what do we need to do? We need to make every client know what their competitive advantage is. Fully underwritten, look like cash, remove contingencies, no appraisal contingency, right? Close in 10 days or less. We have to have them, they have to know they're bringing a gun to a knife fight. When they do, they show up differently. There was an article that came out a couple days ago about a 28-year-old somewhere and his wife. They got 22 offers declined. And it was made national headline news that, home buyers are getting slapped in the face. Well, they just didn't have their offers structured appropriately. They were likely writing 30-day closings with contingencies, and it was risky to the seller. Right? If you structure your loan right, you don't have to offer more every single time. And this is, again, go back to the value of why clients should work with us. If you can increase someone's offer acceptance rate from an average of 16%, which is 1 in 6 offers, to over 70%, right? That means I can look at Greg and say, Greg, when you find your dream home, you have a 70% chance of getting it with us. You have a 16% chance of getting it with others. There's real value there. Hard for people to say. And by the way, Greg, if we structure everything correctly, right? If we structure your offer correctly, you don't have to be the highest price offer. There's a reason why cash offers win, right? It's not always because they're the highest price, it's because they're the surest bet. So we're gonna make you look just like a cash offer. And if I can save you $20,000 on the price of the home, are you really concerned about commission? No, right? Again, it's the before process. Put things on your list that other people won't put on theirs. And lastly is that the clients need to know they're not going to be alone for the next 30 years. This is the biggest millennial, Gen X, Gen Z, this group is, and I'm a millennial so I can say this, just generally afraid of having a 30-pound bag of mortgage rocks on their back. They like the freedom of renting and coming and going. But it's not really the freedom, it's just they're more afraid of doing everything on their own with a lack of financial literacy. So I'm going to show you how we can solve that. So this just shows our Bulletproof Buyer Process. And again, if you have not seen this in action, it is almost like a magic trick. You can get someone and say, hey, Mark, this person doesn't know what they should do. And within an hour, they will know exactly what to do. And they will be really confident and excited to go do it. This works for buyers and works for sellers. But we can't live in a world where realtors do their thing and lenders do theirs anymore. We won't provide enough value alone as lenders. Y'all won't provide enough value alone as realtors. That combination has to be stronger than it ever has been. And this is why. So during, right, that was the before. This is the only during slide. Why? Because it's not that important. Right? You want to have good customer service. We want to close on time. You want to have good communication. You want to negotiate well. You want to do your job. But 185 reasons why during is the same. Right? So allow your clients to experience the joy of buying a home. All those things, yes. But please don't spend a lot of time talking about your value during the transaction, because it's not going to differentiate you, and there's no delta there. This is the most important. And I'm going to kind of go through this relatively quickly. But again, if you're interested in learning more about it, let us know. Just a disclaimer, this is just what we do. You could do your own version of this. If you have a lender you work with, you can invite them to do it as well. But I believe this is what I'm about to show you is the future of the real estate industry. Right? It's what people will come to expect. So, you guys ever heard of the transaction frequency spectrum before? No one ever raises their hand, so I don't know why I asked that question anymore. So this is how companies are valued and judged. And you are all companies, right? Each one of you are running your own little independent company. The companies that are in the forgettable zone mean that your clients are not engaging, nor are they transacting with you on a frequent enough basis. Right? And if you look at real estate and mortgage, we're in the decade zone. 7 to 10 years now is the average time that somebody will buy or sell or finance a home. Maybe we want to just put that one down. So the only person worse than us is the mortician, right? That's their frequency of engagement is once. Now, what we want to do is get into the habit zone, right? That's where our clients are working with us daily, weekly, and monthly. And people say, well, Ryan, people aren't going to buy, sell, or finance a home daily, weekly, or monthly. How's that possible? And the answer is, you're right, but if that's the only value we're offering, we better go work for Sitzer for $40 a showing. Right? The habit zone, if you look at these companies, it's Facebook, Amazon, Apple, Uber. Amazon, my wife is on the hourly spectrum if it goes farther that way. Right? So the reason we can get into the daily, weekly, monthly zone is because our clients are using our products that often. Our products just vary. And I'm going to walk you through them relatively quickly, just for sake of time. So this is an example. All of our clients have a financial services app. You guys ever heard of mint.com? You guys don't know Mint? So Mint was the last financial services app that was free, right? It just happened to sell a lot of crap, right? So people kind of disengage with it. This is an opportunity, and it's co-branded with all your information, right? So this is you and us providing a service where the client is using this daily, weekly, monthly to look at their net worth, to look at their equity positions, to look at their bank, to look at their debt, to look at all sorts of stuff, right? So they're consistently seeing you as the provider of their long-term value. They are setting goals, right? I want to buy a home, I want to pay down my debts, I want to save money for real estate. And every time they set those goals, we get notified, and then it gives us a tracking, right? Hey, they're 50% of their way towards their home buying goal. They're 75% of their way towards their, paying off their debt goal. This is where the proactivity of our approach becomes really important. So let me ask you a question here. Let's say you help a client 5 years ago buy a home, right? Now they call you and they say, what's your name? Ningri. Did I get that right? Awesome. They say, Ningri, I want to sell my home and buy another one. Can you help me? Raise your hand if that's a good call to get. That's a terrible call to get. She was so excited. Yes, no. Why is it a terrible call to get? If they've already done all the mental gymnastics of going, remember that scenario I showed you? If they figured that scenario out, or something even remotely similar, like, hey, I'm going to sell my $800,000 house with the low interest rate, and I want to buy a $1.5 million house with a high interest rate, and they go through that. Honestly, they should just find the cheapest realtor and the cheapest lender and just get it done.
Yeah, they don't need you.
What do they need you for? So if we are so proactively engaged with our clients that we help them set that goal, right? We help them work towards it. No one will ever surprise us with their intentions again. So if anyone ever calls us and says one of those things, it's like an immediate stab in the heart. Right? No one should have to do that. And the real estate and mortgage professional of the future won't let it happen. That's what people will pay for. Right? It's the proactive nature. How many of you guys have, you're not going to raise your hands, am I? The question I was going to ask, I won't have you raise your hands, is how many of you have money in a savings account earning less than 5%? Most audiences would be like, yeah, that's kind of me. You shouldn't. There's no reason you should. It's free money you're leaving on the table. Right? We happen to be associated with a bank that pays 5%. It's a really easy conversation. I helped a client make $7,000 a year a few months ago. Right? That's a $600 and some odd a month extra money in their pocket. So when they went to go look at buying a home, I was able to take that $600 a month delta and offset their mortgage payment. They had about a 4% effective interest rate. They were pretty excited about that rate. These are some of the things that we can do ancillary to our business, but it takes the collaboration, right? Because we don't have the skill set, ability, time, or energy to do all these things. This is just more about the app. So people are checking their credit every day, right? Every week, every month. If they can go into how many of you went to a department store and they ask you if you want to open a credit card?
Every time.
All the time, right? You could just pull out your app and be like, well, let me see. If I open this credit card, oh, this is what happens to my credit score. No. What if I pay off this credit card? What if I close this credit card? What if I buy a car? It'll just show you real time what's happening with your credit. Again, they're using our services, right? They're seeing you and us every time they're doing this. They're setting budgets, right? So they can achieve those goals. And I know budget is a 4-letter word for most people, but this is an automated budget. So it just gives you the visibility that most people don't have access to. How many of you guys have read the book, How to Be a Great Homeowner? No one? That book doesn't exist. I legitimately lived in my house for 4 years, and my dad shows up and he goes, that air filter is disgusting. And I was like, I didn't even know that was there. Like, how do people know how to be good homeowners? Right? So when we talk to our clients, the thing that we put on our list that other people don't put on their list is, Tom, to be a successful homeowner, there's a massive checklist. One of those is understanding home maintenance, home repairs, and home upkeep, not reactively, because that means you're paying too much money, it's proactively. So when you work with our team, you're gonna have a home concierge that helps you with every aspect of that. It's the first time that's happened. So it's gonna help you with every aspect of home ownership, right? Which means our team can commit to helping you grow your asset more than just the housing market will grow your asset. All right, and this is it'll text you and alert you, hey, do this, do that, winter's coming, do this, summer's coming, do that. It has everything you need to really be proactive from a home ownership perspective. Next is a monthly real estate wealth digest. Again, we want them seeing us consistently with value that is commensurate with our earnings. So every month our clients get a real estate wealth digest. It's like a digital interactive bank statement for their house, right? And the way we tell them this is, hey, you have a checking account that has some money in it, but you have a home that has a ton of money in it, right? This is a bank account that you want to use, and when they do, guess what? They see us. We are the provider of this information. Data is going to be the most important part of our business moving forward. If you guys don't know it already, everyone you have in your database, so does everybody else. But the big data providers know more about your clients than you do. Right? So in collaboration, we can fight that fight. Right? So we have all of our data on our clients. We know when there's a birth, a death, a divorce, when their kids are moving out of the house, when they're growing up, right? And if you go to the next slide, these are all the alerts we get, right? First-time home buyer, move up, move down, debt consolidation. We know when they have more debt, right? So we can help them manage it. Equity for college, remove mortgage insurance. We know everything that's happening in our clients' lives, right? And this is really important. We do it through our client success teammates. So every single one of our clients is assigned to a client success manager. And this person is proactively communicating with that client saying, look, if you thought, me and Aaron were helpful for the last 30 days, you're going to be blown away with what we do for you and your family for the next 30 years. And they walk them through everything. They engage with all the technology. They're following up 90 days in, introducing them to CPAs, estate planning attorneys, financial planners, right? They follow up 6 months in with our perfect mortgage promise. And every single year, they're doing a financial review with that client, setting new goals, finding out what's happening in their life, what's going on with parents and children, Right? This is the expectation that our clients have, and I genuinely hope it's the expectation that every client has moving forward. So most realtors and lenders databases look like this. It's just names, phone numbers, and emails, which is just another way of saying it's a phone book. This is what the Real Estate Professional of the Future's database looks like. We know everything about our clients. We know what they're thinking, we know where they're going, we know what their goals are, we know what their challenges are. Right? Which means we can be the ones responsible for helping them get there. And if we are that, the commission isn't a conversation anymore. Because the amount of money we will make them will pale in comparison to the 1 or 2% they may save otherwise. So I'll leave you guys with this. I believe that when I realized I didn't want to be known as a debt salesman, for a long time, I didn't have, sounds like they're looking for someone. I genuinely hope they're not close to you. Everybody keep an open eye here. Shouldn't be on a microphone. All right. So I didn't want to be remembered as a debt salesman. Did anyone know who invented dynamite? You can click that. Yeah. So guy who invented the guy who invented dynamite, his nickname was the Merchant of Death. He became one of the wealthiest men in America. And as he got older, he's like, I don't know if that's going to look very good on a tombstone. I don't want Merchant of Death. He didn't want to be known as someone who kills a lot of people. So what did he do? He created a philanthropy. He created an opportunity for charity. And now we all know him as Alfred Nobel. He created the Nobel Prize. That's what he's known for. That's what I want our industry to do. I want us to change from people who sell homes and give debt to people who completely change people's lives. All right? We need to be known as people who add generational wealth in ways that they wouldn't have without us. So I do hope this was helpful. And the next time somebody asks you what you do for a living, I want you to smile and tell them you're changing the real estate industry, because I guarantee that's going to happen. Thank you guys for having me here today.
Thank you,
Appreciate it.
Ryan.